Hmm. I don't know why that's happening. Y'all hear me now? No. Still. It's using a display microphone. It's not. Let's see. That there's that. These are like in the monitor mics. I'm trying to find which one's going to be the strongest. This one is a little weaker. That one is a little weaker. Yeah, okay. Well, I guess we'll try this one. It's not actually using this mic. It's using a smaller one that's less quality. I don't know why that's not picking up. Derek says I'm good, but anyway, all right, we'll deal with this. We'll deal with this after the live thing. All right, welcome. Good, good, good. Okay, so welcome to the live presentation. Today is Monday, August the 10th. Markets ripping into new highs. We stalled for a couple of days after that big gust we saw here early August, and yeah, tunneled a bit. It's like sounding robotic. Yeah, I know. Somebody says loud and clear. I don't think it's very loud or clear, but it is coming through. Okay, so big news. I mean, what everyone's watching, myself included, is SpaceX. Now, putting my money where my mouth is, I am now short 200 shares of SpaceX. Now, I love Elon Musk. I think this company is going to change the world. All that is true. I'm going to build a long-term position eventually. But first, the stock is going to go down, and there's simply no way it doesn't. Now, I want to walk through what's happening here because the unlock happened last week, the first of 7 share unlocks. Some people still saying they can't hear. Now, when you look at the unlocks for SpaceX, this is really important to understand what is coming. There are okay. Everyone's saying this. Let me fix the sound. I can't deal with this. All right, well, we'll have to use this one. Anyway, this is the unlock going on for SpaceX. And when they dump this many shares, look at the percentage down here, okay? The IPO, and this is actually higher than I think the real thing is more like 2%. But the total percentage of shares that were offered onto the market, a couple of percent. That more than doubled about a week ago. It's going to double again over the next couple of months. And as these unlocks happen, it's going to bring a great amount of supply. Now, the stock is, you go, well, Ross, it went up. You're dead wrong. Let me tell you something, okay? I think you're getting ahead of this. What was going on here is hedge funds were shorting this stock, okay? Between 35 and 40% of all SpaceX shares were held short. That is the highest dollar short position of any stock in the world. And they did that because they know what I know, which is that these unlocks are coming. And they were right. The stock fell 50%. And there's always some fanboys in here who just can't stand what I'm saying. It's going to the moon and they don't understand anything. The stock fell 50%. Okay. And so a lot of a lot of this move had an anticipation of this, and there's some short covering going on. Retail is kind of piling in. You've got the typical 50% drop from peak, which is where people tend to kind of try to buy these. And we've gotten a push higher. At the same time, Elon, and what I think is a very clever timing, announced the details of the Terafab chip factory. So we've had a bit of a pump here. But just because the unlock happened last week doesn't mean they're all going to sell the first day, right? They get these shares. It's not like they pop up in a Fidelity account. It takes some action to do, okay? So they are going to be selling over the next couple of months as these unlock. It is simply a supply and demand question, right? You cannot dump billions of shares into a market without overpowering the buyers. And so we will see continued action lower. I've got a small short position. I'd love to sell this some more around that kind of 140, 150 range. I hate, again, I'm not betting against Elon, just a short term movement in SpaceX stock. I'm going to use all the profits I make on the short to buy more stock when we get it down 50, 60, $70 a share. Okay. So I do think there's going to be a great opportunity. I think it's going to be a generational opportunity to buy SpaceX. But let me show you the news he brought in, or what he announced last week, ironically, on the very day of the chip unlock. So these are the details on the new Terafab factory. And if you're not familiar, it's a joint venture, Tesla and SpaceX, to build a chip factory. They're tired of being held hostage by the chip manufacturers. As Elon does, said, we'll make our own. And I want you to grasp the scale of this massive factory that they're claiming that they're intending to build. It is 1.8 miles long. Okay, and he does this little scale. Now, look at this image here. See this little guy? See that picture? Watch this as I scroll out to get a grasp of the scale. Okay, so that's the guy. See that little white thing? See how small he is? That's him right there where my mouse is. That's a human, 6 foot tall human being. And that's the size of the building. And that's just one. The plan is to essentially have 10 of these for 100 million square feet of facility. So it is an absolutely massive undertaking. Obviously, retail likes this. Institutions like it. I mean, like everything Elon does, it's a bold move. It's a big promise. Is it going to be as big and as quickly built as we expect? Probably not, but nonetheless, I mean, he is going full bore into complete vertical integration. And I think you're going to see SpaceX merged with Tesla. You're going to have one big, massive, multi-trillion-dollar company that owns everything from the cars to the robots to the chips to the space to the internet. It's going to be huge, and when the right price comes for this stock, I think it's going to be a massively a big opportunity. But until then, let's see what's going on and what other stocks we can identify in the market. Now, this is, by the way, our industry strength indicator, and what it does is just look at which areas of the market are rising the most. And if you're newer to investing, if you're looking to be somewhat of an active trader, if you're looking to what I call swing trading stocks that you can hold for 2 weeks to 2 months, kind of that nice position moves, you want to stay in sync with the market. Okay, you want to be invested in the areas where the big institutions are buying. And so when we say institutions, hedge funds, endowments, pensions, ETFs, mutual funds, right? The guys actually driving stocks. And they tend to invest in these themes. So obviously a big theme was semiconductors for the last couple of years. They get heavy into nuclear. They got heavy into space leading up to the SpaceX IPO before those rolled over. And so the areas they're buying tend to rise faster than the others. And so this is a great way to kind of get a view at what is leading the market, which areas are consistently outperforming. That's where the money is going. So you got like cybersecurity here. Notice over 1 and 2 and 3 and 6 and 9 month periods. Notice this has continued to be a strong area, kind of taking a pause over the last month. Notice the gold mining sector beginning to show strength here early, starting to see an early move back in gold. And so this is a great way to keep a breath. I look at this daily. I'd say at least once a week, get a feel for what's rising. If you looked at this 3 months ago, you'd have seen semiconductors on the top of every single list when that was leading the way. They have since taken a breath. But this is included with our Black Ops membership. So if you are not already a member, make sure to go to that tradewithross.com link or just click the link below the video. Get signed up. It's $5 for the whole year. We do these live sessions every Monday. You'll get access to another live session over Zoom with my analyst every Thursday. Plus this indicator, plus bonus reports, plus my weekly newsletter, all for $5. So make sure you get signed up for that. You can even scan that little QR code over there if you want. But anyway, we're seeing some movement in gold, and gold is setting up in a really clean breakout pattern. Everybody see this here? See that shallowing move off the lows? And you can see it. This is the micro gold. I actually bought one of these contracts. I meant to buy it perfectly, but this pattern is going to be your go-to breakout formula. All right. And you saw it perfectly over here at the end of last year. Let's just go back in time real quick and you'll see what this looks like. So this is what you're looking for. And I'm going to turn the moving averages off. So, and it tends to do so extremely cleanly in these commodities and in crypto and things that just move purely on supply and demand. So when you get this big strength higher, that's your sign that demand is there, right? Gold doesn't go from 3,300 to 4,400. The global gold market doesn't rise by trillions of dollars unless there's big buying there, right? So that's your sign that there's big demand. There's more people buying this stuff than selling. And what we want to do is identify these points we can buy right there, for like we don't have to sit through this. And so this breakout pattern tends to form, and it looks something like this, where you get this shallowing. And you'll notice that each of these pullbacks, these little dips, get smaller and smaller. So it pulls back like, 11.5%. This next one's tighter at about 6%. This is gold. I mean, stocks are going to be wider than this, but that one's about 2.7%, and it just stays real tight, right up here, about a 2% range. See how they're getting less and less and less? The dips are shrinking. That's the supply coming out of the market, okay? So demand is buying, supply is selling. You have to get through all of the sellers before a stock or commodity or crypto can go up. Period. Hard stop. If I was sitting here with 10 million contracts for sale at 4,400, it could not physically go one penny above that until all my contracts were sold. That's a supply wall, okay? And so what this pattern is going to allow you to do is identify these spots where the supply, the number of shares or contracts that are for sale, has shrank, and the demand is still high. And if you think about stocks in terms of supply and demand, what happens when there's more demand than supply? What happens when everybody wants something and there's not enough of it to go around? The price goes up. You bid it up, right? When there's more supply than demand, when everybody's trying to sell something and nobody wants it, the price has to go down to entice buyers. Very simple. And so when we can get these patterns where the supply has been exhausted, all the people who wanted to sell and were going to get shaken out and wanted to take profits, once they're all out of the way, then it is free to go higher. Okay? And that's when you tend to see these very powerful moves in here, is when you have above average demand, below average supply. And the same pattern is going to happen at the lows. It's a great way to spot the turns because, again, if it's going to go up, that means there's more demand and supply. If it's going down, there's more supply, right? There's been more supply of gold than there has demand all year long. That's what happens when it goes from 5,700 down to 4,000. And that is going to keep falling until the supply is exhausted, until the people who want to sell are out of the way, until it is finally enticing to buyers. And when that happens, you are going to see typically that same shallowing pattern form there off the lows. The pullbacks have gotten smaller and smaller and smaller and smaller. There is pretty clear resistance here around 4,200 where it cannot get above. And so when it does, that's where we want to buy, right? So this is the idea. What's happening here? This is the idea behind that breakout pattern. And you can see it. You can see this in stocks really clearly. So if you look at the probably the best buying opportunity in Apple, right back here in 2025. Look at that exact same pattern. See how it formed here off the lows? See how it had come up here in 24, chopped around for a whole year. Apple went nowhere. And it continued going nowhere until it finally came in, shallowed up, put in that pattern showing absorption of supply. And from there, it pushed higher, right? If you look at Tesla, this is a bit of a wild stock, and it hasn't really done much for the last couple of years, but look at this move over here. Look at how you saw the huge demand. They then exhaust sellers, come in, tighten up. It'll form this kind of wedging pattern. And then look at that breakout. That was the biggest, that was the fastest 1 month move at any point to the upside in the last 2 years. And if you look at a big run, let's take a stock like Costco that made a huge run over in here. Notice how it plays out this pattern, okay? Now, for 2 years, this stock went absolutely nowhere. And the real action took place once it finally came in, shallowed up, tightened, breaks out right there, runs from 570 all the way up here to like 900, right? Comes in again, shallows, bases out again, runs higher. And the powerful stocks like Micron will do this very quickly. Let me put this in logarithmic scale. So look at how many buying opportunities you had. Now, we did buy this My Alpha Stock service up here in April in the breakout, but look at how many opportunities there were when you catch a run, okay? Let's go back and look at Micron, because this one, I mean, we could all be retired if we went 200% long this a couple years ago. And look at how you get these bases. So first of all, huge move, 112% in a month. That's a double. It needs to be absorbed. They need to get the sellers out of the way. It comes in, it shallows, it tightens, breaks out right here, runs again. Another 100%, right? After a move that strong, needs to absorb, needs to digest. There's going to be profit taking. Got to get those out of the way, get the sellers off, get the leverage out, breaks out again. It then runs another time. In this case, 70%. And it comes in, it starts shallowing, and then it looks like it breaks. Now, what happened here in April of this year? Why might this have broken down and come way here? Well, this is when we went to war with Iran. Everything went down, right? Let's take it all in perspective. It went a little further than it should have, and look how quickly it came right back. So a little wiggle, got a wild rip right back in. Nice, tight little handle. We bought it here in one of our trading services with our members, right there at that breakout of 480. Then it runs all the way to 1200. Okay? So you had here in Micron several lot. You start buying at 135. You add at 275. You add at 500. When you're finally out of this thing, you've got a massive position. And so this is not the only way to trade stocks, but this is my goal. My goal is to buy here and buy here and buy here. I want in for the good times. I just want to catch these rallies as it pushes higher. And when you have a strong bull market and you have clear leadership and you have, leading stocks and leading groups doing this, you can make a lot of money with this. And listen, if you see a stock, I think it's undervalued, take SpaceX. You believe, I think it's going to be $1,000 stock a decade, 2 decades from now. I'm buying now. Nothing can make me sell. Fantastic. This doesn't apply to you then. But if your goal is to look for some opportunities to get in these stocks that can make nice big runs over a couple of weeks, a couple of months, this is one of the best ways to do it, is following these breakout patterns, because what you're doing is kind of exploiting those supply and demand dynamics and buying right there when demand exceeds supply. Okay. All right. So a lot of you ask about the $100,000 trade. When I posted that video, listen to me. The day it went live, I was down over $1,000 on those trades. You hear me? If you bought every stock when that video posted, you made even more money than I did. If I see one more person ask me, what, oh, you do it and then you post it later. Folks, I'm doing this as fast as I can. Okay. Don't watch. I don't care. But I know I haven't sold Jack. I'm holding Jack. Like, I'm trying to get this up to you as fast as I can. Okay. Now, Jack has a bad cost basis because if you remember, we bought Jack over here, made a big run, sold some into this, and then I accidentally got stopped out right here, bought back in here. So what it's doing is taking this profit, adding it to my cost basis, showing that I'm long from like $18 a share, which I'm not. But yes, still holding Jack, took some profits into here. Stock still looks good. I think we still got a short squeeze. My first target remains up here at this kind of $20 to $22, $23 a share mark. Okay. That's, I think, the first stop for Jack on the ride up. And Jack also has earnings coming up. And that could be a potential catalyst for us here. It's coming up in a couple of days. Let's see, when's the exact date? On Wednesday. And so here's the thing about the earnings in a stock like this. If they just don't suck, it's going to do well. If they show they're not, same store sales are just not shrinking, if it shows any sign of positivity, given the short interest, the stock could do very well on that news. Okay. CoreWeave, let's see. Yeah, so CoreWeave was one of those stocks. I mean, it was oversold after Brenner's hedge fund blew up. It was one of the ones we bought over. I got it like here at 73. Don't I call it the low, and got out around here. So from a technical standpoint, it does not look great. It's been nothing but chop city for the last year and a half. It's clearly in a downtrend. It's underneath its 50 and 200-day moving averages. Not saying it can't go up, but is there any kind of a statistical edge here? No, not at all. Right? I wouldn't buy it here. Now, when we look at let's see, look at oil, for example. All right, so let's look at whoops. Okay. So I bought some oil, an oil contract this morning. Hasn't done much, right? I'm not risking a lot of money on it. I don't know why my stop was right there. I can't remember. But look at a 5-minute picture of crude oil. Do you see how it's kind of doing that same thing we talked about? How it's kind of coming in and see the dip's getting tighter and tighter. See, we're starting to break out here. See this move? So you can apply these exact same principles on a shorter term chart, right? Um, yeah, copper's kind of pulling back a little bit. Whoops. S&P, oh, we're ripping. Let's see. All right, let's go back to the daily here. Market holding near its highs. So let's see what we can find in terms of stock performance here. So obviously gold doing very well. The gold miners, an area we want to look to. Um, the cybersecurity stocks, those are taking a pause. Can find some opportunities in there. Let's look at some of these gold mining stocks. Frontier, FRO. Yeah, this looking really, really good as well. The shipping stocks, this situation in Iran, which I've been saying since the onslaught, was never going to end quickly. I think President Trump vastly underestimated the resolve of these people. I think they would probably destroy their own country before they let their pride get hit, if I'm being honest. It's not going well. And crude oil has stayed elevated, but the bigger opportunity, I believe, than the price of oil is the shipping companies. Because what's happening is, if you look at a map, all that oil coming through the Strait of Hormuz isn't getting through. And most of that goes to Europe and Asia. And so what they are doing, Europe and Asia, is saying, forget it. It's not worth the risk. We can't get our oil here. We're not going to deal with this crap. We'll just order it from the US or Canada or South America. We'll have it shipped around Africa. It'll take a little bit longer, but at least we're going to get it. And we're not dealing with a war zone, right? And so what the people who benefit from that, other than just the US oil companies who are making record profits, are the shipping companies doing longer routes, charging more per mile, and even the companies building these long distance carrier vessels. So I've talked about this a lot. I think it's going to be a huge opportunity. I think these stocks like Frontline will be big winners. Somebody mentioned BYRN. Yeah, that one's still up, doing very well. I think we talked about this when it was like $4. It's now 470. So that's almost a 20% move in just a couple of days here. This is from a technical standpoint, no, it's in a nasty downtrend, but it's a super cheap stock that's running into some temporary issues, and I think you could play it for a value trade in there. Alloy, somebody mentioned, yeah, Alloy once again ripping. We talked about this one over here back in May, saw a massive move in this stock. And it's, albeit not perfect, it got a little whippy. It's a volatile stock, but you can still see that clear consolidation down here off these lows. You see the breakout through 11. I mean, that's a 90% move in a couple of weeks, right? All came back down. Who cares? Okay, if you let it go 90% in a couple of weeks and don't sell any, that's on you. I mean, you gotta look. Don't look a gift horse in the mouth, right? I'll hold these things for a couple of months. I'm absolutely like Jack. I've been in for a while, but let's look at Jack. Okay, it's at $17.50, right? We started buying this over here at 14, so it's up, pretty good from there. It's 23, 25%. If this thing rips to 25 tomorrow, I'm selling. If it takes 2 months, I'll wait 2 months. It's not about I'm going to hold for this many days or this many weeks or whatever. It's I'm going to hold until I think that move I'm looking for happens. SpaceX still gapping up. Yeah, 134. Yeah, DHT. Notice it's very similar to the other shipping stocks. Same kind of action. So I think these are all setting up. My thoughts on B-Fly. I mean, it looks great. I don't know what it is. It looks like no, 2.5 billion. Wow. Yeah, really, really clean. What you'll notice is these kind of lines in the sand with these stocks, right? And typically, what was resistance becomes support and vice versa. So if you look at this stock for all of 2025, right? It breaks down here, can't get above, what is this, $3. Can't get above this $3 level, right? Or 280, whatever, like right in there, right? Can't get above it, can't get above it, all right? Finally breaks out, nearly doubles, 70, 80% in a couple of weeks. Pulls all the way back, and look where it gets support, right? And then kind of comes in. Notice how the whole thing kind of shallows and tightens up, and the absorption, nice big breakout higher, comes back into the meat, rips. I mean, it's pretty volatile. It's not trading super clean, but But yeah, there's some clean opportunity. But I mean, geez, another 6% today. This thing is soaring. Zim. Yeah, Zim is probably the weaker of the shipping companies. Um, see, they're more in cargo versus crude oil transport. So that's that's a differentiator between them. AER. What is this thing? Finance, rental, leasing. 23 billion. Lease, finance, commercial flight equipment, passenger and cargo aircraft, headquartered in Ireland. Interesting. Okay. I mean, technically, it looks good. You got rising moving averages. You've got tightening price action, right? Just generally speaking, it's kind of compressing, and this is what stocks do. They're kind of like a coiled spring. Like when they're whipping all over like this, I don't want any piece of it. It hasn't found any concentration of buyer, but as that volatility kind of compresses, that's usually when it's getting ready to release that energy and go higher. Okay, so it's a little sloppy, but I think it looks good. Boeing, no, what's B? Barrick. Yeah, Barrick's still a little. Let's look through some of these gold miners, see if we can find any of them that are setting up now. The tough thing is having the discipline, right? So this is Newmont. See how I've marked the previous opportunities there. See how when gold was ripping, like it was just, and put it in log scale. See how pretty this was? Big tightening off the lows. Nice clean base formation. Breakout at 60, runs to 100. Nice, clean, shallowing base. Beautiful breakout. Like as long as that trend in gold is running, this is just going to print you money. Now, it has pulled back and it has just ripped higher on this move in gold. So we may not see, and now this is looking better. Gold.com. Okay. Not as familiar with this one. Let's see. Trading of gold, silver, platinum, palladium, wholesale trading, direct to consumer, secured lending, El Segundo, California. Okay. All right. But this looks a little better, right? It's not quite perfect. It's still a little sloppy. Kind of came in here, but if it would kind of do this and tighten up a little, that could be a really clean breakout in GOLD. Yeah. I mean, these may just not be good entries. They've just had such strong moves over the last week there. All these charts are looking pretty similar. Wow. Look at BTG. 23% on Friday. I think Hecla Mining's getting pretty enticing in here. If you look at this kind of 16 half-ish type area on the chart, something like that. See how this massive decline from 34 all the way down to 16, they got cut in half. Notice how it bounced right there. Rolled, comes back, bounced right there. Bounced and held for 2 weeks. Finally breaks down, and now that same area is resistance, resistance, resistance. See there? So if you find these, and it's whether it's a call wall or it's a big set, whatever it is, these tend to be significant areas. So what I like to happen when it does this, a couple of calm days in here absorbing that supply, and then a breakout higher, I want to get in this. So Hecla Mining could actually be looking really, really strong in here. And you only need to risk, call it $1 a share or so on this trade. EG, yeah, all these are just kind of ripping up. Let's see if there's anything in the cybersecurity space. Cybersecurity's been leading. It's taken a bit of a rest this month, which is typically good. Now this one looks really nice here. See how we've got this coming in, ripping up on supply, and then just nice, tight. There's some price actions tightening there. This could be a great little buy above 1270. Sentinel's kind of extended in here. I don't like Booz Allen. Checkpoint we've been watching. I don't think it's ready. But once it does finally, if it does finally come in here, see how, again, same idea. I thought we were tightening up. It wasn't done yet. It's come down, so I need to see it kind of absorb it. Look, this thing's going from, 240 to 112. That is a 50%, 55% drop. You don't want to try to catch a falling knife. Only when and if we get a pattern like this that tightens and shallows and shows us the sellers are out, the buyers are in, the volatility's drying up. That's what you get before breakout move higher. And look, if you just want to buy it here and you believe in the company, that's fine. But if you're looking for these explosions, if you're looking for these periods where the stock can just make a quick 30, 50, 80% move, the breakouts are the way to do that. So there's nothing stopping you from trading any other way. We absolutely buy pullbacks and buy value stocks and things like that. But there are patterns that will appear over and over again, just because of the laws of supply. That's just what happens, and they're all going to be a little bit different, which is why I try to draw them over and over when I see them here. But as you start to see this, you'll just spot this stuff, and you'll start to see it forming. And this is the same thing here. Went from 36 down to 20. It's a 40% drop in a couple of weeks. Massive selling. I'm not going to get in front of that. Wait until it comes in and shallows and gets absorbed. Then you buy. You might go, Ross, I could have bought at 20. Yeah, it could have fallen to 10. I mean, again, I just want to be here for this. It is a pipe dream to think you are ever going to buy the stock right here and sell it right there. It is luck. It is fairy dust. It is, I don't know. I mean, it's purely luck. It's not my goal, right? My goal is to avoid the chop, right? Let me turn these off. To avoid, I don't want to be involved in this. I don't want to be around for this, right? I don't want to be, but I want these windows. That's where the money's made. And so if I get the breakout here, if it comes in and it breaks out, that's where you get these explosions from. So that's all I'm trying to show you. Please don't take anything I say as a bad company, this thing's going to fall apart, anything like that. I just want you to see that this stuff repeats. And if you can start to spot it, I mean, you can do really well. It's hard to tell because this thing's going so far so fast, but look at Palo Alto. I mean, this was the end of last year. This wasn't even a year ago, right? Stock fell 40% in a couple of months. Not looking good. Okay, well, I'm going to avoid it until it does look good. What do I need to see? I need to see the selling absorbed. I need to see the pullbacks getting lower. I need to see contraction, right? If a stock is falling 28% in a couple of weeks, there's still a lot of sellers. Now it's only falling 17. That's a little better. This one's about 16, roughly the same. Next dip's only about 7. 5, 6, that's what I want to see. Nice tight action. And then a breakout on volume. And look at the volume down here, okay? Look at how much selling was taking place over here when the stock was falling. Who's in control? Big drops on big volume. That's heavy selling. And notice that as we progress through this pattern, notice here how there's little pockets of high volume in the selling, but there's also these big pockets of below average volume. And when we get right up here, when we get to this final, kind of week or two before the breakout, I'm drawing this box around, notice that nice low volume in here. And then as it breaks out, what do we see? We see higher volume, right? So they were trading 4 million shares, 4.9, 5 million shares a day. Then 10.5 million, 11.5 million, 9.5 million. So twice as much activity on the breakout day as on the pre-breakout weeks. That tells you everything. There's more activity and the stock's going up. What does that mean? Demand's increasing, supply's not there. That's where the buy was. Okay? And so maybe you got it a little bit early and you bought it over here and you had to be patient for a couple. Like, okay, fine. Like, you know, it doesn't be perfect to the penny. But look how that played out. Look at how quickly it shot up when you followed the rule. I mean, that's a 62% move in 3.5 weeks. Okay, well, that one's going to need to be absorbed. Wasn't a very long one in here, but it was a couple of weeks where you saw it kind of come in, get nice and tight. Once again, look at the declining volume here. Look at these pockets of below average volume. And then notice how it kicks up as the stock breaks out. So that's your buy point. So anyway, I just want to show you this. And interestingly, you know, again, there is your breakout point here around 300. Notice how it never violated that again. Right? So if you were trying to buy this on pullbacks, and I would have probably tried to buy it around 300, I would have been just barely missed it by a couple of bucks a share. But you want to look to the 50-day moving average and the previous breakout areas for pullback buys. You're in Palo Alto from 323. Nicely done. Where's the right exit plan? Well, there really is no exit plan now because the stock's never been here before. You and every single person on earth who owns Palo Alto stock right now is up money. Nobody's down. So supply, when it comes to targets, typically comes from areas where there's trapped buyers. Okay, so you know, if you take a stock, let's look at like a big name stock like Nvidia. Okay. I'm trying to find a good example here. Now, this will work, I guess. So think about what was going on here in Nvidia. Oh, sorry. Back over here, okay? So just think about this in terms of who's in trouble. People got really excited and bought this stock up here. It comes down. It finally get a chance to get it break even. They take it. It comes back. Then it chops around October, November, December, January, 4 months in this kind of 130, 140, 150 area. And then it absolutely gets murdered with the trade war, right? So everybody who's long, which is a lot of people, millions of people, didn't spend a day or an hour here. It spent 4 months up here in this range, has all been underwater. So when you bought a stock at 140, you've been in the damn thing for 7, 8, 9 months, you're losing money. It finally comes back to where you bought it. What are you going to do? You're getting out. You're going, thank God, get me out at break even, no loss, right? That's why it stalls at these previous areas, these supply zones, okay? So if you buy a stock off the lows or in a breakout and there's a previous supply zone, not saying it can never go above there, but like that is my target, right? So if you take Jack in the Box, for example, right? Now we'll put all this stuff together here, okay? So, one, the stock is dirt cheap. Two, it's got a 38% short interest, meaning all these people are betting big against the stock. They're eventually going to have to cover. When they do, that's going to create buying. So any somewhat positive news in this stock could absolutely rip higher. It's been 110 bucks a share. It got down to 10, and then look at the pattern we saw off the lows. Okay, let's put all these lessons together right here. Notice how massive selling, and then it comes in and it shallows and it tightens and it gets right up here. See how these dips, see how they shrink, smaller, 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 smaller. See that? See the clear as day resistance at $14 a share. Everybody spot that, right? So that's why I liked this from a technical standpoint on a breakout right there. That's why I made a video this day, and the thing went from 14 to 18 bucks in a couple of days. Just say you missed it. You're one of these people who tell me, "Oh, I didn't get posted on much." Okay, whatever. The stock comes back. Where's your next buying opportunities? Right here at that exact same breakout level, right? Right here on these dips, right back to that same price, and it pushed higher. Okay, so your long jack from 14, 15, 16, whatever. Where's your target? Where do you think this stock is likely to go? Well, the last area of supply, the last place there was buyer and acceptor selling, buyer and seller acceptance. It sat here for 2, 3, 4 months, right? These people who thought they were getting on the cheap noticed they got a heck of a lot cheaper, may want to get out. So that's kind of that $20 to $22 range. So I buy the breakout here. My stop loss is here. I'm looking for a move to there. Whether it happens in a day, a week, 2 months, it's about a 50% move, right? So as you put the pieces together, all we're really doing is trying to stack the odds in our favor. Not me, not Warren Buffett, not Jim Cramer, not the president of the New York Stock Exchange knows for certain what any stock is going to do at any given time. Nobody knows for sure exactly. All we can do is stack the odds in our favor. If we're in a bull market, the odds of stocks go up a lot better. If we're seeing massive moves in metals or semiconductors or cybersecurity or some specific areas, those stocks are going to have a better chance of going. It's where the momentum is. If these stocks are forming breakout patterns or consolidations or some technical thing that tells us, well, historically, what that means is the supply is getting sucked up, the float is shrinking, demand is high, so there's a better than average chance of making a big move. If I get a stock with a high short interest, they have to cover. If I have SpaceX that has 2 billion shares coming to market at some point in the next 90 days, that's working in my favor. So all we're doing is stacking the odds in our favor as many ways as we can. And you may do this fundamentally. You may look at, there's lots of ways to do it. But anyway, that's what's going on here. Okay. Questions about this? I don't know why it keeps kicking me off. I think because I'm doing the replay mode. All right. How do I get the strength indicator if I don't use TradingView? I don't know. We only made it for TradingView. I guess you could have AI code one. ACHR, ripping. Archer Aviation. This is news based. Earnings beat up 20%. I mean, the only way I trade these big gappers is called the opening range breakout. What we do, let me show you this. I'll go like a 1-minute chart. Just turn it. Come on. Here's how you do the opening range breakout if you're interested. Okay, so the idea being, everybody knows what the word gap means when it's not gaps. A gap means it closed the day here, opened up here. There's a big gap in that trading, right? And so typically when a stock makes a big gap move higher, it is either it's either what I call a gap and go or a gap and crap, right? And gaps happen because some unexpected piece of news happened. In this case, probably better than expected earnings and sales. It could be a drug trial. It could be a government contract. It could be a gold discovery, whatever. And so what you want, the reason it's gapping is people, oh man, this thing's worth more than we thought. We're bidding it up pre-market. So if this is the start of something, if this is a gap and then it's going to start a trend that runs for several weeks, it should go. If, on the other hand, there's pent up supply, people are going, I just need a reason to get out of this thing. I'm not doing very good. It gaps up. They take advantage and go, good enough for me. I'm out. They'll take advantage and sell it off. And so the opening range breakout, all you do is go to a 1-minute chart, draw a bracket over the first 5 minutes of the market. Okay? Line the high, line the low, first 5 minutes. And what you're doing is giving it these 5 minutes to digest the information. Let people who want to sell get out. Let the people who are going to get excited buy. Let that happen and see if this is going to trend. And then all you do is, if it breaks that 5 minute opening range high, okay, this is the opening range, you buy it. And here's the beauty. Your stop loss is the low of the day. And so what you were saying is, I let it trade for a couple of minutes. I let the buyers and sellers get positioned. It then broke out above that. So I'm going to buy it to see if this is the start of something big. If it comes back down and takes out the low of the day, it's not, right? And so what that lets you do is get into this stock for a 3.6% risk. This stock moves on average 7% from low to high per day. It just had a massive gap rip move or something, right? This thing could go to, 8, 9, 10, $15. And so if you're risking 3% to make, and you make even 30, that means you only got to get these right 1 out of 10 times to not lose money. So I don't want to make this your entire bread and butter, but on these gap stocks, and it's got to be like 10, 15+% gap, consider doing this opening range breakout. I wish I'd have seen this. We've done some of these live before. Somebody said Bitcoin. Yes, I would 100% agree. And Bitcoin is going to trade this pattern better than anything else. If you go back over time and look at this, you'll see these shallowing patterns really clear. I mean, all the way back here to these lows, right? You'll see it put these in. You'll see the supply. You'll see the support and resistance levels, and it'll come in and shallow and tighten just beautifully. I think this is bad data right there. But yeah, when we look at it today, I would 100% agree with you. It looks like it is trying to absorb. Is it ready? Probably not. But it's starting to. And I actually bought Bitcoin over here. I told all our members to buy it too. Like we thought it was good. And it was, it worked initially, right? You had this, there's big demand. It's coming in. It then began to absorb all that, right? Big dips and shallowing and tightening up in here. Broke out right here at 112. Instantly went to 122. I mean, $10,000 a coin in a couple of days. And then just faltered. There's your retest. Second bounce. Couldn't do it. Now we have a pivot failure. Now it's below our breakout area. Okay, and watch how this played out. The action got wider. It didn't tighten. New high, new low. So it's going from tightening to widening. It's the opposite of what we want. And I did a video like right here where I said crypto's falling, Bitcoin's going to 60,000. I got more hate, more dog cussing, more you're a clown, you don't know what you're talking about than any video I've ever done. And look where it went, 60,000. How did I know it was going to 60,000? That's where the meat is. That's where the last supply zone is. That's where there's lots of buyers, and that's where they're going to find them, right? This stuff ain't that hard, folks. And the problem is everyone wants to name a million stocks, go, well, I know what this stock's going to do tomorrow, that stock next week, this one, this one, this one, this one. Like, I don't know. 98% of the tickers you give me, I have no idea what it's going to do. I'm focusing on the other 2%, right? I'm looking for the ones that have the odds stacked in my favor. If the volatility is widening, it's probably not good. If it's compressing near the highs, it's probably getting ready to run. If it's on the way down, it's probably going to the next supply level. If it's on the way up and has been there before, it's probably going to chase the next supply level, right? Look at here. See how long it's spent here, this kind of 105,000? It fell all the way down to 60, came back. Notice where it stalled for the next 2 months. That's a supply zone. It's coming up. It's bouncing. That's where the supply is. The supply until it breaks through that. Goes to the next zone. Stalls here for a while. Breaks down. It's going to the next one. Like, just how many indicators am I using? I'm using a crayon, folks. a crayon. It is all supply and demand. You know why there's 10,000 different trading indicators out there? Because you guys buy them. Every indicator comes from three things: time, price, and volume. That's all there is. A trade took place. This many shares sold at this price at this time. That's all there is. And yet people have made 5,722 red light, green light, flashing magical indicators out of it. Because they sell them, folks. Okay? You don't need that stuff. If you just learn to read what's happening on the chart. And have some patience, right? I mean, that's the hardest thing, is going, you like, I love Bitcoin, I think it's a great buy here. Okay, I mean, if that's fine if you're buying it long term, but if you're like, I want to buy something I think can move in the next couple of weeks, well, have patience, wait for it. Thoughts on WDC? Is that Western Digital? Yeah. I mean, I don't like it here. Let's think about what's happening, okay? We had a phenomenal trend in this stock. Look at that dashed line. That's the 50-day moving average. I'll turn the other ones off. A good trending stock, and I'll put it in log scale. A good trending stock, and this thing went quite on a trend from 30 to 770. Okay? That is a life-changing move. Notice how many times it violated its 50-day moving average. Almost never. Right? For a year. For a 3,000% move. 2,000, whatever it is, right? Okay? This should have been a buy point on that 50-day. It broke way below it. It came up. Now that 50-day is holding the stock down. Well, for the last year, it's held it up. Every time you get near it, it bounces. Because why is that happening? Because the stock is in demand. There's more demand and supply. The buyers, institutions, the hedge funds, endowments are taking advantage of the dips. They're doing what we all do when something we want goes on sale. They're buying it. You're looking at a house for 500 grand. They mark it down to 300. You go buy that house today, right? Because you know it's worth more. That's what happens in an in-demand thing gets cheap. But they're not buying this. It gets a little move. Now it made another low and a new low. Lower lows, lower highs. That's a downtrending stock. It is now broken. It could shoot to 800 tomorrow. Please don't take this as some like prophecy that Western Digital is going to $2 a share. It's not what I'm saying. I'm just interpreting the activity, the buying and the selling here, right? So I have zero interest in Western Digital here. But where would I have liked Western Digital? Well, I like it over here. I like it after it doubles and then comes in and compresses and shallows. Boom, breakout. It then ran from 130 to 180. What did it do next? Same damn thing, right? Breakout. It's trending higher. It's holding above the 50. It's making big moves and consolidating cleanly. Like, that's what I'm into, okay? I like that. This one started to get a little bit sloppy, but same kind of deal. And this is the trade war, right? I'm sorry, this is the Iran war here in April. So it was getting nice and tight, but just rip back, right? I mean, 20% in 2 days in a $150 billion company. That is massive buying. It is still in demand. So I'm still on the long side, right? But now everything's flipped. So I'm not interested anymore, right? And it's a mistake a lot of people make, is that they're going, man, they just want to hitch their wagon to this thing. And like, I mean, of course, like, who wouldn't, you know? It's been a monster. And then they go, oh, finally, a pullback. Finally, a 50% off sale. This is where I'm going to buy. Like, I just think that's the wrong attitude. Like, why did it fall 50%? What drove the thing from 30 to 700? Massive demand. Consistent 9 months of demand. It never fell 50% in there. Why is it falling 50%? Everyone's selling, and they're not buying it. Maybe the earnings slow. Maybe the sales is down. Maybe the valuation's out of control. I don't know, and I don't care, but it's not a demand. Now, Vera just technically has rolled over. It was doing great for a while, but looks kind of ugly in here. Tempest AI. That's a stock Pelosi bought. Let's see. I mean, a lot of you guys are just kind of chasing what's up this week, and you know, it's like you see a couple of big days, just want to chase it. You know, maybe it goes higher. I have no idea what it does from here. I know it's extended. I know it's up 20% in the last 2 trading sessions. And there's a lot of supply here between 57 and 60. I know it's in a massive chop zone. I know it's in a downtrend. Like I'm not interested in this, not even close. Rare earths. Yeah, I actually like rare earths here. Now, look at this. This is an entire ETF. Okay? A whole ETF. Look at this. Do you see the patterns? Where's the buy points? Look at this. It's trending down for years. Okay? Until what? Let's go to log scale to make it easier. Until what? Until that finally gets absorbed. Look at how pretty this was. This is poetry, folks. There's your breakout. It runs again. Big dip. Kind of sloppy here, but notice it compressing, right? Breaks out. Big run. Pullback. Where does it pull back to? Pretty much the penny. There's your retest if you missed the first breakout. Okay? Runs up again, then what? Are you starting to see this? How this can make you money, right? Any one of these are great little 2, 3, 4 week moves here. And then it changed. Everything rolled over, right? So on this pullback, what would I be looking for? Would be a good buy point. Well, you got supply zone here, kind of 70, 75. You have this big area right over here. Notice it was the breakout, right? It was resistance. That was the swing low back in November. I mean, look at that right there. And a nice quick recovery. So what's it going to do now? I mean, I don't know. I like to buy coming out of tightness. Ideally, I don't like just chasing them. But I'd be a little bit careful here because this has been support, support, support. Watch out for some resistance around 80, 85. Lyft, hadn't heard that name in a while. Yeah, Lyft looking all right. It's not perfect, and they aren't always, but like you can see the stage is playing out here. You had this big, what is that? 50% decline. It's been several months consolidating in here, kind of tightening up, right? I don't know what happened here. Got a little squirrely, but came ripping right back. So, yeah, I'd say looks good. I think it's probably on its way to, early 20s, low 20s. Beta. Yeah, we looked at this one before. Beautiful. I only know because the drawing stayed on the chart. Yeah, absolutely great. Is that Marcus Aurelius in the chat? I'm just looking at your icon. Marcus Aurelius. Husband to a murdered wife, father to a murdered son. I will have my vengeance. Yeah, but anyway, beautiful. Textbook action, right? IPO, massive value, big exit from the early investors, and then just nice shallowing, tight consolidation, really, really clean. Beautiful breakout here at 20 a share, and it's at 25. 1, 2, 3, 4, 5 trading sessions later. All right, so you're up. Oops. You're up 25% in a week. Perfect. Great. That's fantastic. Where's your target? Bingo. Somewhere between kind of 27 and 31, right? Somebody looking to sell right in here. If you can get in these things, you risked Well, I don't know what you risked on it. Probably lower the day stop, but nice little 40, 45%. That's exactly what we're after. And then I want to do it again and again and again. I'm rolling over that edge. I'm just dating these stocks. I'm taking a nice little lick, going on to the next one. ServiceNow. Yeah, I like now. And this is a great example I talked about. Like, I bought this thing over in here. Okay, we did a video on it. This is a big company, $100 billion. It went up 35% in like 3 days. Heads up, I sold. You had a double gap extension. That's massively overbought, right? So you had the big gap here, run, another gap here, classic blow off top move, sold out in here. But I do think it is great long term. When we step back and look at the picture, I think it just got a little overcooked in there on comments from the CEO of NVIDIA. And it's not perfect, right? It's not like a super, but we see that. See how it's tightening, see how the pullbacks are dying, and it's compressing. That is indicative of a stock that is consolidating off the lows. The buyer stepping in, building positions, and I'd be targeting as a first stop. It's like 180 to 200 range. That's what I'd be looking for. Okay. All right, guys, we are over time here. I'm going to go ahead and end the session, but if you haven't already, make sure to go to that tradewithross.com link to get signed up. It's $5 for the whole year. I will give you lifetime access to the industry strength indicator. You are going to get my weekly newsletter that goes out every single Friday. This is the one now this past Friday, talking about the trend in AI and what I see happening going forward. So it's all about stocks, different opportunities. You're going to get some bonus reports with that. You're going to get access to our support team, live sessions twice a week, all of it for $5 a year. And it does not even renew. You have to manually do it. So people think it's like this switch that after a year you're going to get ding $200. Doesn't happen. I swear there's no bait and switch. It's $5 for the year. Take me up on it if you want or don't. Either way, loved having you here. And I'll see you guys next week. Thanks, everybody.